Well, there's speculation that the U.S. Federal Reserve may begin tapering next month, and that's seen emerging markets and currencies tumbling around the globe. So joining me now for a look at investor sentiment towards emerging markets are Bridget Taylor, who's Director of Cross-Asset Solutions at Dreadnought, and Victor Khomaswana, who is Business Development Executive at PBC. Bridget, let's talk firstly about the tapering. It's one of those terms that is used most days of the week in the studio. And we know it's going to happen, but we don't know when it's going to happen, and the markets still react to it.
Well, it's quite interesting. I mean, we've seen this huge move in terms of certainly the developed world looking at that quantitative easing, something to sort out the growth issues. And unfortunately, you know, what we've seen is a slow, progressive, keeping us out of recession. Now the talk is about how we're going to taper that back. And the impact of that really has been on the asset prices, specifically in emerging markets and those markets that have done really, really well out of the perceived quantitative easing and obviously that investor sentiment. So, you know, if you look across the globe, you know, commodity prices rallied. We saw the emerging market currencies doing well. We've seen our interest rates rally hard. And now what we're starting to see is a reversal of that. And specifically, if you look at the likes of South Africa, Australia as well, commodity-based emerging market currencies coming under a lot of pressure on the back of what happened with the gold price as that investor sentiment starts to pull away. And then now the talk of tapering, not great for emerging markets as well as South Africa. South Africa on the back foot because of a lot of other issues, namely the unrest with regards to strike action again across various sectors. We're looking at OT or AXA under pressure this morning again. So these things don't bode well as the fact that we've got continued issues within our minds, and then we run quite a big current account deficit. So for South Africa, we've got to be careful. We must play this carefully, because potentially we could see a further sell-off in the emerging market front.
Victor, it's not a surprise, this. I mean, it's a question of timing, isn't it?
It's amazing, isn't it, David, that we know basic economics will tell you there's a boom, there's a bust, you know, which means what goes up must come down. Therefore, don't get too panic-stricken when things are going wrong, and that's what I wish we could see this sentiment about emerging markets to mean. If we had unrealistic expectations about what emerging markets can do, then it's okay. But don't forget, if Europe is still just getting there with regard to recovery, and the US is saying, well, maybe, emerging markets mainly export to those developed markets. So that symbiotic relationship should not be ignored. You can expect that if the economic recovery in the developed market is not meteoric and things aren't happening exceptionally at a high pace, then you're going to find that even your emerging markets will suffer. But I think in the end, if you are an investor for the long term, you know emerging markets will be where the action is going to be for the next, I don't know, 100 years or so. Because they are just so far back in terms of infrastructure, and often infrastructure brings a whole lot of other investments. Mining is still a dominant activity in those emerging markets, especially if we're talking the African continent. And with that, with just those two, you are bound to see an emerging trend that's to the positive. But the other thing I like is, of course, that telecommunications, especially mobile, tends to make it easier to transcend and bypass some of these normal cycles that you expect in economic development.
Yeah, Bridget, isn't one of the problem emerging markets? You know, it's a simple, big, it's like a stone sitting there, but in fact it's not like that. There's the currencies are one issue, selling off of currencies. So we had the rupee at an all-time low against the American dollar. But that's a particular kind of problem. That doesn't mean emerging markets are in trouble. That's a currency issue. And then there are, as Victor says, commodity issues, and then there are differences within the emerging markets. So you've got to be careful.
Absolutely. I think the big thing with the emerging markets, and especially if we talk about Africa, is that there is a lot of things that still need to be done. And at this, you know, we had this discussion a year or two ago where we were saying interest rates are at all-time lows. The currency is trading at stronger levels than it's been for as long as we can remember. Are we taking advantage of those scenarios that we find ourselves in an environment where we should be putting in the infrastructure, where we should be positioning ourselves? Because at some point, the developed world will come back online. And as Victor mentioned, then the export sector needs to be strong. It needs to be in a position where the country can actually benefit from that in an environment that we've had the opportunities. And that's what we need to ask ourselves as South Africans. If you look into the African continent, what they're starting to get right is to say, okay, how do we position ourselves? Because we hold on to resources, we hold on to a lot of really valuable assets, but it's how to capture that and make that valuable so that that growth momentum continues to go from 4.8 to 5.3 and continues to grow as the global economy and the developed world starts to come back online. And that's really the question we need to ask ourselves. I think we're really greatly positioned by the fact that we're in Africa, because I think Africa is the last frontier frontier where there's real opportunity. South America has come under pressure, the Asian region under pressure, even in their emerging markets. Central Eastern Europe still bodes well, and if you see what's happening in Europe, sentiment's picking up, sentiment's improving quite dramatically. In the US, the talk about tapering in an environment where they've been so negative, suddenly coming online, this all bodes well. However, we must be cognizant of the fact that we need to play it right now, because when the world changes, we need to be in a position of strength.
Well, Victor, we look at South Africa and we look at Africa. African growth rate 6, 7, 8%. That's what we hear. South Africa 2, possibly lower. Warnings from the Reserve Bank.
Exactly.
And we are dithering, aren't we?
Which means when you're South African and you're an investor, your thinking of what emerging markets means should be other economies outside of South Africa. Because here we're talking about job losses. If you were in Ghana right now, you wouldn't hear this debate. If you're in Tanzania, you would be hearing people investing, because Tanzania is becoming a uranium producer, is becoming a bigger gold producer than it is. So yes, relative to South Africa, lots of the African economies are emerging markets. South Africa is not. But if you are in the US, the whole continent gives you the opportunity to mix and match your choice of countries and assets in which you put money in. So what I'm saying is, as a South African investor, it's a very good opportunity to think that intra-Africa investment and trade.
But not South Africa.
No, maybe not South Africa. Remember, in South Africa, lots of things are mature. Look at our highways. They match just the best in the world. Look at the Gautrain.
Some of them.
No, sure. But what I'm saying is, if you are driving in South Sudan, I mean, you nothing to compare. My point is, if you are an investor who's looking for growth in South Africa, you're losing an opportunity to find it in Tanzania, in Ghana, and countries that are often politically stable, so they don't pose a lot of risks.
A lot of the companies reporting in the last few weeks, how many of them have said where the growth is coming from the African continent outside of South Africa. But Bridget, also looking at investors, there's two kinds of investment, if I could put it crudely. The yield, the interest rates. We just put the money where you get the best return. That's a different kind of investment to actually saying, I'm looking at a place that I want to be in, and I want to put big money in direct investment and leave it there.
However, you do need to fund. So even if you're the long-term investor that's looking, as Victor mentioned earlier, outside of South Africa, there is a currency issue and there definitely is an interest rate issue, because at some point you're going to have to borrow that money to place it elsewhere. So these things do play, they all hold hands with one another. However, if you're looking into, as South African, as we mentioned earlier, the best part of this is the fact that we're so closely aligned. We understand African culture far better than a European, an American, or potentially an Asian. And for that, we need to be cognizant of the fact that we're part of this bigger picture. How do we position ourselves and create that, that joint relationship that benefits all of us? Because I think we mustn't keep ourselves in the mindset that South Africa is not part of the African continent. We are, and we've been in a position where we've managed to create a great banking system. We've got a great reputation. There are certain issues, but that's part of being African. And you know what? Now the African continent's doing well. How, as we as South Africans, make that happen? Do we allow South Africa to fall behind the curve? No, let's get on board and let's see how we can position better.
Well, we'll have to stop there. That's Bridget Taylor, Director of Cross Asset Solutions at Dreadnought, and Victor Khomaswana, who is Business Development Executive at PPC.